Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab community, as well as the community itself, which is a group of like-minded traders who have come together to leverage their collective experience. This is about the business of trading. Business of trading might be a bit different than what you imagine it to be, and it doesn't matter how long you've been trading, what you do, how you do it. What does matter is that you have an interest in sustainability and maybe finding out what some of the differences are from what we think this business is and maybe what it might be. Now, what it might be for me will be different than what it is for you. But I can assure you that I do have some experience, and that experience is honed over 46 years. So while there is not one way to trade, what you might find is many of us spend a lot of time and maybe even our complete opportunity, time-wise and asset-wise, not potentially pursuing the right answer, but really going off looking for things that fit our psychology, which is certainty and confirmation. The business is not built on certainty or confirmation. It's really built on statistical probabilities or gaming. So the idea is take a proven business, the gaming or casino business, deconstruct what they do, how they do it, and why they're successful, and then apply it here. Because the casinos operate in a random environment. They don't control the cards that come out of the deck when they play their games or how gamblers play the cards. They only control how they play the game. If we look at it that way, and it's not the individual interaction with the quote gamblers, if you will, it is the overall result in a random environment. So we need to solve for randomness and not try to solve for certainty. And our nature is to look for certainty in an environment where it doesn't exist. Does that resonate with you? Well, eventually it resonated with me. And unfortunately, I spent years trying to squeeze out the risk. And the reason for that was psychology, risk avoidance, looking for certainty. It's part of our primal wiring. It's why we're still here, possibly, as far as a species, and why we're now at the top of the, if you will, the food chain. However, we are wired, though, to avoid risk, and we are wired to seek certainty. How can we have it in an environment that's random? That's the question for this astute group of developing traders. And just because I've done this 46 years and been on a desk and trained other traders and managed money, and it all goes back many years, and there's so much more I can tell you about it, but it's not really worth your time. What's important is I spent my time researching. And everything was new when I came in the business in 1980, as far as technical aspects of it. And my first thing I learned was classical bar charting at the CME. So, and that's when we got a chart book once a week and drew our trend lines with a pencil and a ruler. And I keep my ruler here on my trade desk so I don't forget what it was like, thinking that I actually could figure out what was going on when I really didn't have a clue. But nobody tells you. By the way, this is what structured trades look like. I'm not a vendor. There's no cost for this. And when I put these together, it's because other traders are asking me, what are you doing? And, so these are just sort of an ad hoc kind of thing. You can get some ideas, but there's no plug and play. Sorry to disappoint you. No plug and play. If it existed, I, just like you, would have plugged and played. But it doesn't work. But everything works randomly. That's our catch-22 in trading. Everything works. And to put it even in a simpler perspective for you, if you had a random buy sell button and you didn't know either one, you'd still have winning trades. That has to kind of give you a sense of what randomness is. Now, a couple other pieces of information. First of all, take a look at this. Do you have a trading companion? Now, I was kind of joking the other day. Do you have a pet lizard? Whatever you have, take a photo of your favorite trading companion with Bookmap in the background or just your trading station. If you don't have Bookmap, I don't know if you know this, there's a free digital version you can download, you can poke around with it and play with it. And then, of course, there's a library of webinars on this high-tier tool. Most of us don't understand anything in the sense of how do you use a high tier tool. We look at something, we go, I don't know, and we walk away from it. Now, maybe this kind of tool is not appropriate for you, but in this business, it's a business of edge. What tools can you use to extract edge, and what tools should you throw in the round file that create conflict? That is the differentiation. For me, and I'm only talking about minimum input. So you can get a free digital version of Bookmap. You can check it out. If you take a photo of your best buddy, post it on Instagram, LinkedIn, or X, and use hashtag BookmapPets. Moving along. Hope you're all having a good day. We're going to, of course, talk about the market and the opening trades and the current trades that you might be participating in. Any trade I discuss here is not a recommendation. There's no plug and play. Nothing is mechanical, unfortunately. The business of trading is statistical probabilities, not predictability. So we got to get over it. You can't be in an uncertain and random environment and extract certainty out of it. You can extract metrics and statistical edge. The work in this business is finding out where you have an edge. And the other part of the work in this business is understanding and accepting a random outcome. It's not right, wrong. It's plan. Execute plan. That's the thing you need to do. Create plan. That's what you need to do. Knowing where your edge shows up, even though the outcome will be random, that's what you need to do. If you haven't done any of those things, then you're sitting with the gamblers. And I always say, get your buddies, take whatever amount of money you're comfortable with losing, go to a casino, get the cocktails and the ticket to the buffet, and have a good time. It's entertainment. But if you're here for creating a potential career path, this is business. So that's the differentiator. Now, a couple little other announcements. This is very important. Next week, I'm going to be streaming only in the Bookmap Discord TraderLab. And Discord only. There will be no YouTube. YouTube will be posted later after the stream, and I don't know how late it'll be. You'll still have the opportunity to watch it later. But if you want to see real-time narration, and that's not trade calling, it's just let's look at it develop. And those of you who watch the stream, you know that if we get into real time, we go there, and whatever happens, happens. That's life in the fast lane. It is always random. So there's no holy grail. There's no secret sauce. Nobody has an edge on anything as far as predictability. It doesn't exist. But if you understand market mechanics, how the market works, why it does what it does, you can anticipate what might happen and then where it might happen if you use tools like auction, the profile, the auction. I don't use any indicators. I always say traders rely on indicators. They never learn how the market works. They're letting the indicators do the heavy lifting. Actually, if you learn how the market works, you will not need indicators, or you can bring them in so you know how to apply them. But an indicator is just a derivative of some kind of price action or measurement. It certainly doesn't get the full picture. It can't do it. So, and it can't anticipate behavior. It just does whatever it does. So about next week. Now, the other part is very important, rollover. I'll be rolling over from the September contract to the December contract effective Monday. So that means all these levels are going to be adjusted. So the higher time frame levels, whatever they are, they're going to be adjusted by the spread, the settlement spread between September and December at close of business today. So that'll be one of the thrills I'll have is adjusting everything. So if you're not sure how to do that, if you're in TraderLab, post a question about it. Otherwise, refer to your software vendor on how to do that. There. And if you have questions, please post them. I'll do my best to answer them. I can't see your questions while I'm doing this streaming, but I'll do my best. Please leave a like also if you find some value in this. Encourages me to keep doing this. The other thing is Dan or Stephen, I'm getting asked for clarification on where this stream will take place in Discord. If it'll be in the general or if it'll be specifically TraderLab, like it is right now for Bookmap registrants. By the way, you don't have to be a Bookmap user to come to the Bookmap Discord TraderLab community. You won't be solicited or abused. We have the market that can give us sufficient abuse, and abuse comes from randomness. We're not victims, only victims of ourselves. Believe it or not, the market is not out to get you. If you actually do what I did many years ago and create an error cost calculator, and there's one available, one of our participants, Greeny, in the Bookmap Discord TraderLab, created an error cost calculator. Just like trades, or you call them setups, what about errors? Can you measure your errors, and can you identify the triggers of the errors? You know, FOMO, moving the stops, whatever, bailing out, you know, whatever those things are, which is fear, passing on a trade, rationalizing why the trade is going to fail when it hasn't. How do you know a trade's going to fail, by the way? Do you all of a sudden get insightful, or are you under the influence of chemicals that are being released in your brain by Hyde, that primal wiring? You need to learn about yourself. We have a psychologist in the TraderLab, JJ Marks, and he talks about attachment. And we're attached to the outcome. Why? We want approval. We want to tell ourselves we're smart. We know what's going to happen. I don't know. How do those fortune teller businesses do? So let's look at the condition of market. Trend up, having a great time. And now I post things in TraderLab. And by the way, there's no right, wrong in trading. There's only maybe. So if you're visiting here in the stream, write that down. The best you have is maybe. Maybe it'll do this, maybe it'll do that. And the other part of it is we can use statistical probabilities, whether it's in our plan or targeting processes that I've shared in TraderLab, but none of it is 100%. It is always maybe. Maybe it'll do this, maybe it'll do that. The other part is how, if, when, how. By that I mean, which rotation? It's all random. Is it going to go up before it goes down? If you get long, is it going to take you out before it goes up? Is it ever going to go up? If you can't answer those questions, then all you can do is follow a plan. And in TraderLab, the objective of TraderLab is to help you build a business. And you're going to go through things that you've never imagined. Why? You've never been in a 100% random environment 100% of the time. Our world that we live in outside of trading is very structured and very predictable, you know? I mean, the red light comes on at the traffic light, you know, hopefully you stop, right? Why? Because the other guys are going to go. It's predictable. Everything that we do outside is pretty much predictable and structured. In here, the trades must be structured, but the response and the participant behavior is not. So anyway, so much for that. So what did we have yesterday? Trend day up. What does that suggest? Possible continuation today. What else does it say? Friday. What happens on a Friday? If you're hanging out long, what are you doing? Well, you might take profits. So we have a conflict in the sense of trend up, get long for continuation trades. Conflict, get long, continuation trades, profit taking at any time, and the late buyers today can get taken out. Wonderful. So what do we do about this? Well, you come to the business, you put your trades on, and you put your helmet on, and you accept the random outcome. We all take stops. What's a stop? Overhead and cost of production. The casinos pay the gamblers, yet they just deal the next hand. We are emotionally attached. If we take a stop, we might skip the next trade. Or instead of playing the next trade exactly the way it is planned, because we're emotionally attached to the last outcome, we move our stop to break even, or we bail out on the next counter rotation. That I refer to as Hyde, Jekyll and Hyde. Hyde's the lunatic. Hyde is risk adverse. Hyde wants to protect you. Well, we're in a business of risk. How can you avoid risk? You can't. So let's look at the first trade. So what do we know? Let's talk about what we know. ETH high. I'm going to give you a couple statistics. We are opening, and this kind of sets up the probabilities, and you know we're in an uptrend, so you might think longs might be something to think about. We're opening And settlement is, oh, there it is. Settlement's here. So we're opening lower inside of yesterday's range. And I pull out my stat sheet that I've shared in the Bookmap Discord TraderLab. And you have to vet everything for yourself. So let's look at the stats. If I open lower inside of yesterday's range, there's approximately 80% probability we go there. There is approximately an 81% probability we get to the overnight mid. Lovely. There is a 74%-ish probability we get to the previous settlement. Naked volume point of control. This is the fair price from yesterday, or highest volume. Let's look at that one. 68% probability. That's nice. Taking out the first hour's high, which is called the IB, just giving, and we don't know where it's going to be, by the way, until it is. Okay, just letting you know. It's either first hour high, low. And it could be both. That is about a 98% probability. Taking out the ETH high or low, 97% probability. And here is the one that is most interesting. The previous high or low. 87% probability. Past performance not indicative of future results. So what does that do for me? It says, go north, young man, go north. However, let's come back to the caveat. The caveat is, it's Friday, and we have longs in the market, and we have longs that came in today. And I always talk about the concept of fuel. And that is the market goes up to go down, the market goes down to go up. So all of this is before the open. Friday. Do you feel lucky? Well, so then what might we do? We might look at longs, and then if the longs get taken out, then we can come down in this area. And if this is the first hour's low, and if we come out, that would be called the neutral day. In other words, balanced. Two sides, we're hanging out slosh. And if we don't accelerate out, and all we do is take the weak longs out, if we come back through here, and this is not a recommendation, we can then return there. That's called the IB failure. Now, there's approximately a 30%-ish probability we take out first hour's high and low, but being it's Friday, we can get that long liquidation. So we have longs in here from yesterday's trend day. We got longs in here from this morning. And the ETH low is out here, and the probability of getting ETH high and low is not high, but it, of course, exists. Getting both the ETH high and low is 27% probability. Does that give you some sense of what might happen? This is part of trade plan, and all of this is before the market opens. Are you prepared for the market? Not what will happen, what might happen, where it might happen. That's the question for this astute group of traders. If you don't have a trade plan, now you're sitting with the gamblers, and you are going to have winning trades. So that's not the issue. I always thought that winning trades, just make them better. But I coined a term for myself called Trader Groundhog Day. That is waking up in the same place, working hard, having winning trades, and just thinking I had to make it better. Maybe I tune this indicator. Maybe I add another one. Maybe I use a Keltner channel. Maybe instead of a 20 SMA, I use an EMA. That's it. Look how nice that fits. The term fit, curve fit. I built trading systems because I thought the computer could do a much better job. It really did. It just curve fitted and optimized. Now I was trying to trade, and again, this is not for day trading. This is for position trading. When I was a fund manager, I was running across a lot of asset classes, so there was no way to do it manually, But that didn't work. It would work, and then it would break down. I was always re-optimizing. So I'm just saying, if you're using indicators on their own without an understanding of how the market works, I suspect you might be at a disadvantage. But as they say, the proof is in the P&L. So if you're profitable, it doesn't matter how you get there, and I don't mean randomly, but consistently, come to TraderLab. Clue us in. We're always looking to get better. So what do we know here? RTH open. Absorption is here. Sellers are here. So I have a opening. Now there's a couple things, and I always talk about this in TraderLab. And that is something called the opening swings. The opening swings, the first moves, this is the opening swing high, and currently that's the opening swing low. Notice what's at this? Well, there's buyers here, and that suggests, absorption, a rotation up. But what's up here? I got my sellers here, so I chop, 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 chop. Whichever side takes control first, there's going to be stops on the other side. So what I have found, and I always suggest, especially when you open in a fair area, high volume is kind of like your shopping. And I always equate, at least the way I relate to trading, is shopping. So the idea of the auction, which is what this is, and it's the same as your supermarket, if the price is too high, you're going to run out of buyers. If the price gets too low and it's on sale, the buyers are going to come for it, and the sellers are going to start raising the price because of demand. And then we're going to find equilibrium or a fair price. Yesterday's fair price was here. So anything above it might be too high, anything below it might be too low, and our nature is going to be to come back here. That's one piece. Now, the last auction is the ETH. The ETH auction, this is the fair price. So the highest volume is here. So what do we know? This might be too low. This might be too high. I have a high probability of getting the ETH high or low. I'm closer to the ETH high. My primary orientation is here, and the first hour's high. And then after that, put your helmet on. Really. So that's it. So now it's get long, at least for me. Not saying for you. You're a counter trend trader in an uptrend after a trend day, and that has an edge, and I'm not saying it won't. Then you follow your plan and you execute your edge. Doesn't matter. It's not a judgment on my part. My objective is to help traders build trading plans and try to get in alignment with the broad stroke. It's not frequency of trading. This isn't a video game. This is about edge and extracting edge. And we, unfortunately for us, we're attached to every trade. I was posting in TraderLab this morning that I already assume I'm taking a stop when I put the trade on. It helps me detach from being right. Of course, we root for the trade. Why wouldn't you? But the fact is, can you accept before you put the trade on that there's a random outcome? If you can't deal with that, then you're going to look for certainty, right? When you look for certainty, instead of getting in when your fear is the greatest with less information and less risk, you're going to be chasing the market with FOMO, but not have any better probability of a positive outcome, just more risk. Something to think about. So let's look at this. RTH open, having a great time, two-sided. Okay, open auction. And it's Friday, so we're looking for responsive selling. Well, what first? Statistics suggest here. Let's test. So if I open, notice where we come. Notice the opening swing. Too high. But what do we know is too low? Too low. So bang, bang. And it's like, what do we do with this? Well, opening swing low, opening swing high. So let's mark the opening swing low. This is what I do. By the way, what I do doesn't mean anything because I'm as clueless as everybody else. And I'm very happy to tell you that. When I say clueless, I don't mean ignorant. I just say, I don't know. So I don't know. Do you know? I don't know. Here's what I know. Trend is up. We might get some continuation buying, and it's Friday, and we can get some profit taking in the late buyers can get blown out. I already know my trades. My trades are longs first, maybe, unless I get the selling first. If I get the selling first, that makes the longs better because I can ride up on their stops. If I get the buying first, that makes the longs vulnerable because we can come down on their stops. Write this down. The market goes up to go down and goes down to go up. The market, and now right here, the market goes up to go down, goes down to go up. All fractals are time frames. Market goes down to go up. Market goes up to whatever. Okay? Opening swing. High risk to take any trades here. Overnight mid, overnight volume point of control. So why don't we want to take a trade here? Stops. Now what? Now let's look. So right here, I get a sweep. Now, this might only be what I call a stop pick. If I get long here, this is a trigger. This is my obstacle. And I was posting in TraderLab. This is long. There's a problem. That's your scale. No range. So this has everything. This is a location for a long. This is your obstacle. Why? This is the retail price from the ETH. If it's too low, then I have the possibility to come back to the current retail price. Retail means high volume. So it's outside, hit your head on the table. Now, if this had the range to qualify for getting risk neutral, then it's a trade I take. Okay? So this trade, not qualified. I posted that in TraderLab. Now, I don't call trades. I'm clueless. I take stops, but we have to get over it. But now what? Overnight mid. So this looks, and this is the opening swing coming out, in my opinion. Again, no clue. So what is the overnight mid probability? 81% probability. So I had overnight volume point of control. Look at the stats. 80%. Overnight mid, 81. Who knows? And leaning trend up, so it's longs only. Now here, I get a buy sweep and I come into liquidity. So let's look at what happens here. Now I'm sitting here and my jaw be on the floor just like yours. Where's it going? Don't we wish we knew? I don't know. So right here, let's look at the language of the market in micro. So this would be a long if qualified, not qualified for me. Maybe you, not me. I don't know. Remember, clueless. I'm going to draw a little box here. I want you to see structure. What I do, and I do this for myself because things scroll off the screen. That's the reason I do it. I forget. And there's so much going on. So what I do is, here's what this is. This is an auction. Sellers are here. Buyers are there. That's what, there's your iceberg. There's your absorption. And here's where your sellers are. Break high. That's your trigger. The entry would be here. The stop will go under here. And again, that's your scale. So you can't enter here. I mean, I don't know about you, but about a point, and not even a point to get risk neutral is not in my thing. So that doesn't work. Now I come down here. So this right here is resistance. Let's just watch how this might work. I come down. I got my aggressive sellers. I got this. And I'm outside now, and I don't know. I can't pick the low of anything. I see this. I have my sellers are here going to zero. Liquidity comes in. Iceberg executes. Buyers get above the sellers, which are right here. Again, I'm just showing you an idea, a concept. It's not saying it's any good. I have no opinion. I do have an opinion, but it's not worth anything. You have to always see what resonates with you. So the buyers are here. Now, I don't know that. Sellers are here. As far as I know, sellers are here. The sellers are there. The sellers are there. Why didn't this go up? Absorption, passive side, delta, buy stops, delta, break low. Right here, going to zero. What was here? The buyers. So I got the buyers here, the sellers here, and the high volume is in here. What is high volume? Let's think about this. This volume up here is high volume. It's the highest volume for the day at the time. Developing volume point of control. In here, this is like your convenience store down the street. It's a little store, but there's still an auction for S&Ps going on in here. And in the little store, this price is too low. If I break high, I now know this might be too low, and this micro high volume suggests maybe too low. So what do I have here? Maybe too low, maybe too high, and then I also have this and whatever's above. Let's just watch it. Now, let's watch. Where's my support? Isn't it there? Is everybody tracking? First trade. How are we doing in YouTube? Is this making some sense? Guys, you can learn this. I'm not saying you want to or you should, but I don't know anything more than you. What I do know is how the market works, and I know where it might behave. Look at what the fair price was. I said there's two things, here and there. If I take a long, so what did I find out? I got my buyers here. I cannot execute here unless I have that in my skill set. Let's assume I can't. We're all developing traders. By the time, and if you execute here, it's FOMO. The actual thing to do is to learn discipline. Hardest thing you'll ever do. I'm telling you, everybody thinks learning how to trade is difficult. I don't think that's the problem at all. I think anyone who comes to TraderLab and does the work and vets their trades and understands market mechanics will know where the trades might show up, and you have to vet them. So what do we know about this? We know that's the retail price. And this right here, if that's retail and this is too low, that's my resistance. This is my support. If I'm in an uptrend and I cleaned out the opening swing low, right? What do I want to do? I want to get long, and where am I going for my scale? Back here. Then what do I have? Now, there is a bit of a problem. And you're going to say, what's that? There's a key report, University of Michigan, 9 a.m. It's a high-risk report. Can be outsized volatility. And what I have found, at least, and it's just something you have to determine for yourself. No, it's not me to tell you ever what to do. It's your plan, not mine. At 9 a.m., if we have a high-tier report, you can get outsized volatility. Fundamental inputs disrupt everything. And the auction, which you're observing here in trading, really, and you are too, no matter how you slice and dice the market or indicators, it's still based on participant behavior, which is an auction. What's too high, too low, what's fair. If you get an outlier event, it disrupts the auction. And that's where, if you're using stops, which of course you should, you can get an outsized event. And if your stop gets triggered and the book, the liquidity gets pulled out of the book, so it's very thin, you could get filled, next week. So when I used to trade NQ, and back then you pick up the phone and call your guy down at the edge of the pit, it's different. But, it would be like, where's my fill? And you say, we'll get back to you on that. So, they'd be filling the orders, tossing the paper down on the floor. It was just, all different. But if you get skidded, you don't have risk management. And I've traded through 911, the 87 market crash, all kinds of different geopolitical events and other events, and there is no such thing as risk management. And as you know, in futures, there is no such thing. You have stops don't guarantee anything. So if I know there's a high tier report, then my choice is based on my plan is either to get out before the report, or I've already scaled out and I'm willing to take an outsized risk. I'm not saying it's right for you. I'm just giving you the idea of what this business is. So our next target, we're going to go for the ETH high, okay? So that's a statistically. Now, 9 a.m. is this report. Now, remember, outsized. So let's look at this. We get the report. Let's just go take a look. And let's assume you weren't going to do anything until the report. Well, let's get back here, 9 a.m. I'm going to open it up and let's look at the report. What do we do? Let's look at this. Stops are here, right? Target is up here. Now, what I do, and it doesn't matter what I do not put my exit here. I always give it a couple of ticks. I'm just saying. It's just because I've been left at the altar too many times. Everybody knows about the ETH high if you've been in this business. And if you've been in the business, everybody knows there's a high probability of getting this thing taken out, and we're in an uptrend. Why not? Doesn't have to. So for me, scale is always ahead. I give it 2-3 ticks, and then I'm going for my next target, which is this. Okay, that's my next target, statistically speaking. Now, it doesn't ever have to get there, right? So we get we have our report. Up we go. Wonderful. Now, where's our stops? Underneath the swing low. What is this? Where was my buyers? Weren't they there? There? Absorption? Clueless? Break high? I'm not taken out of the trade. This sets up a potential trigger to come back to there, under there, or a scale, see the behavior, and then you're going back for that. Not a recommendation. This is not, it doesn't have to be your trade. Let me extend these lines. I'm hoping Bookmap will get around to taking care of this for us so I don't have to keep doing this, and you too. So you can always, ask about it. So notice where the support is. It's here. Where's the support up here? It's here. Comes down here. Where does this trade fail? Well, it could fail under there. If you take a continuation trade here, your sellers were there. Take the other side of this. Let's look at the structure here. I do, because I'm not smart enough to know anything other than I don't know. That part I figured out is I know why the market came down. Sellers are here. Buyers are there. The volume is in here. This is like a VPOC. High volume behaves the same way. So what was in here that was too low, this is now too high. So I can, if I get this rotation, where did the buyers were there? The sellers are there. The volume is here. When the sellers take control and this is too high, this is my resistance, and so is that. So if I get long from this out here, I'm going there for my scale. And then, and at 9:30, we have something called the IB stat. You remember, it's over 98% probability. Remember, you got to vet this for yourself. And yesterday's high, clueless, is an 87%. So I have no idea what it's going to do. So that's not my job. So then my job is to just trade statistics and wear a helmet at all times. Watch. So if I take along there, I get a scale here. If I break above it, that's lovely. We now get our overnight high, and this is the next target. Just saying. Now, let's continue. We get a buy sweep. A buy sweep suggests, by the way, over here, a sell sweep suggests a potential counter rotation. Sell sweep here, potential here. Sell sweep here. Sorry, Charlie. Up. There's nothing mechanical, okay? Here, buy sweep, sell sweep. Well, buy sweep, potential counter rotation. Sell sweep, potential rotation. Where's my resistance? Where were the buyers? There. Where were the sellers? Here. Break low. Trigger. Where's my resistance? There. You can see how these structures and the high volume is here. So let's throw that in here. Now, VPOC migration. This now is potentially too high. Now, the way I would use this, I think of volume as support and resistance. So I'm going to label this. I call them variable high volume nodes. I made this up. I don't know. I didn't know what to call it. So that's what it is. It's high volume. Let's look at this from a shopping perspective, because this is shopping. This is the retail price. Lovely. New retail price. If I break below it, it is suggesting, if I don't, in other words, I come down, and if it's too low, I do this. If it's too high, I break below it, and I'm going to test support, which is right here. Let me show you how I do this. And I'm doing this in all time frames. So those little ones that I show you are the same thing. So when you're in the convenience store, it's the same. They have an auction in there, high, low, what's fair. When I get into a higher time frame, as you think of it, the whole day, this is measuring the volume for the whole day. So as this moves around, it's showing me what the participants value the product for. So if this price is too low, now this is a new price. But what happens if this price becomes too high? I'm not paying that, and we leave. In the microstructure, I'm doing the same thing with these little fractals, I call them. See? Not saying it's a good thing. I'm just saying it's what I do. I don't know what's going to happen. Do you? Let me know when you know. Because I'm always looking for the Holy Grail. No, let me change that. I stopped looking for the Holy Grail. I can't avoid risk. I have to understand how the market works. I have to understand why the buyers were here. Here's the other thing I know. If I come out here and take these longs out, which is possible, I then want to see if the buyers, these guys, come in and take the other side, because then I want to join them. And it's called mean reversion. And I'd be coming back here and potentially going for my stat. Why might it go up? What's in this leg? Sellers. Why did it come down? What's in this leg? Buyers. Buyers, sell stops. Sellers, buy stops. We are riding the wave, and the fuel are the traders on the other side. So it's important to consider, where's the stops? Today's high for the shorts, the counter trend traders. God bless them. We need them. And it doesn't mean they don't get paid, right? Of course. But where's the edge? Trend up. I find if I can get under here and get these guys out, and I don't get selling below here, or I get wherever too, whatever it does, my probability of getting the ETH high and low, remember, and this is how stats come in, and none of this is like it will, it's maybe, is 27% probability. The probability of taking this low out is also around 30%, but the trend is up. So if I can get these guys, these longs out from a strategic point of view, this is my support. If I come under, I'm looking for these guys, these buyers, to take the other side. I call that a liquidity grab, just something, because the liquidity is these guys, us, the weak, fearful retail traders. I can assure you the hedge funds, the banks, and the icebergs are not using stops. They are in a whole different world, in a different business, okay? We are primarily competing against, number one, ourselves, and number two, other retail traders. But the biggest competitor is us, against us, because the person, the entity, if you will, hide, is you. And that will take you out of the business before anybody else will. It's you. So you've got to learn about you, and you have to master yourself. You do not know yourself. You may think you do, but this is not a business of software, setups, trading gurus, chat rooms, influencers. It's you. A business is you. You don't know you in this environment. So you only can bring your experience outside here and apply it. It's logical, but it doesn't apply. It's like landing on Mars and you think you're just going to go out there without a helmet, I mean, does that make sense? How are we doing in YouTube? Hope you guys are getting something out of this. As a reminder, I will not be streaming live in YouTube next week. If you want to see this in real time, then use the link in the bottom of YouTube and come to the Bookmap Discord TraderLab community. All you have to do is verify your Discord username. You'll get sent a little code and you plug it in, and then welcome to the party. And you'll have access to this in real time. Otherwise, it'll be posted to YouTube later. I also suggest you review these things, Sit down with your pina colada at the end of the day or over the weekend. Hang out, narrate, pause it, You see something of interest, take a screenshot. Make every minute you spend give you a yield. Remember, now here's the thing. How many of you would have bailed out on this? Now, here's the answer. Now, not how many of you, because I know a lot of you would. Here's the answer. Your trade plan tells you what you do. When you're in the trade, you're going to be, there's the chemicals are released in your brain. It's primal. And this is where I say you probably don't understand these mechanisms, fight and flight. Well, what is fight and flight? Fight and flight is, oh, look, there's a saber-toothed tiger. I'm out of here. The other part of it is there a saber-toothed tiger behind the rock? Fear. So what do we look for? Well, I don't want to go over there unless I know. Well, that means I can alleviate the fear. Well, I can't get paid in this business unless I manage my fear, because it's always going to be uncertain. So the chemicals that circulate in your brain, which has protected us, from, to become, a dominant species on the planet, worked really well when we crawled out of the primal swamp, but not so good here, right? So you need to learn about yourself and the chemicals. You're under the influence. You probably, I hope, would not drive drunk, but when you're trading, you're actually drunk. Chemicals. So you need to understand that, and that these chemicals are released. You have no choice. It's there, and the intelligence or logical brain is built on top of this reptilian brain, if you want to call it that. Sometimes it's referred to as the monkey brain because it's more primitive, less developed. And if you accept that we crawled out of the ooze or whatever the heck happened, it's there, and it evolved with us. And then we got intelligence, and whatever else happened. And, I'm not saying that is how it happened. I'm just saying maybe that's how it happened. And if that's what happened, this primal structure is always operational. It does not supersede what you know in a conscious world. It is operating under the hood. No different than your heart pumping and your metabolic things going on, your kidneys filtering, all this stuff, right? All that's going on. You're not consciously telling your body to do these things, right? That's what's going on in your head. So be aware. I know now that I'm mentioning it to you, you're going, yeah, that makes sense. Yeah, but you don't understand it, how it relates to this environment. So how do we get control? This is the big thing. How do you get control over your inner self? What I have found, and I've trained, I'm just going to say, a substantial number of traders over many years, when I ran desks and the rest of it, I found we all have the same problems. Me especially, because I'm risk adverse. So I'm not risk seeking. I'm actually on the other side. So I had more issues with fear than I think those who are gamblers, who go, yeah, I want to play, dopamine. So there's and JJ Marks can talk about this in TraderLab. He's a psychologist. And JJ, I don't mean to impose on you, but you've been really helpful in talking about attachment and all these elements, and I hope you'll keep doing that for all of us. TraderLab, there's no cost for this. And Greenie, thanks again for the error cost calculator. Guys, I was throwing thousands and thousands of dollars out the window with errors, and I never quantified them. I just put them in my journal. I'm not going to do that again. Yeah, intentionality. Intention had nothing to do with the results. I can have the best intentions on the planet. I'm not going to bail out of the trade. I'm not going to do it. And then you get this. Now, because I didn't have a specific plan, now all I have is my emotional triggers, fear. Does that happen to you? Let's think about this together. What do you have? You go from euphoria to depression. Oh, I better get out. And where do you finally give up? Here. Or maybe here. And then it doesn't hit your stop. Now you're going, oh, I should have stayed in. Now you get in here. But there's more risk now to this because it's the opening swing low. And there's stops. My next trade, not a recommendation, is if I come out here is to get long. If I don't come out here, I'm already long. If I come out here, I already got profit. I only got one left, and that's for the high. If I get taken out, it doesn't take away from the possibility of getting to the high, and there's no guarantee I won't come out and keep going down here. If I have no guarantees, then what am I doing? If I can't get a guarantee, what am I going to do? I'm going to operate like the casinos do. Imagine you're a dealer in a casino, and you're dealing your blackjack, and you know how the cards, stay over and some get turned up, right? And you're the dealer, and you see some great cards going off to the gamblers. Do you just fold up there and just pay the gamblers? Would the casino stay in business doing that? But you're doing it if you bail out of your trade. You're folding. Because why? You don't want to lose. Well, what happens if it doesn't come back here and we go to this statistic before we come out here? Now, I think, listen to what I'm saying, think it will, but I can't know. I can suspect, but who's suspecting that? Hyde. Hyde is saying, as it's coming down, you better get out. Fear of loss, fear of the unknown, fear of the saber-toothed tiger. Oh, I don't want to give it back, all the good stuff, right? This suggests the counter rotation, but this is where the trade fails. And here's what I know. Not, again, I'm always going to say, not a recommendation. I'm clueless, but not ignorant. If it takes this out, it gives me a better opportunity. I would scratch or whatever my trade plan says, and if I see the absorption, I just get long again. And now these guys become my buyers. It actually gives me fuel with new longs coming in. And these guys caught, I got buy stops or buyers, and new longs gives me this. Okay? Can you see the logic of why if I would stay in a trade, let it take me out, have an emotional response, and just discount it? I can't stop my emotions. That's why I have a plan. I don't make it up here. When I'm emotionally attached, which we are to a certain extent, I'm going to be responding to the chemicals, fight and flight. If I know that, and you should know it, because you are, then don't make it up here. You can't make decisions here. You have to know what you'll do before it shows up. And that's what trade plan is about. That's why I created TraderLab. I think of all the years I spent running in circles, and I created that term, Trader Groundhog Day. Work hard, tweak, tune, add, remove. I got it now. I would have made blank yesterday or last week doing this, and then here it is. And then it still works randomly, but I'm not moving the ball forward. Then go back and do some more every weekend, after every day of trading, looking at it, tuning and tweaking. Trader Groundhog Day. Are you in Trader Groundhog Day? Where's my resistance, by the way? So support, what's this? I'm not paying that. Resistance, right there. Why? Well, we know that's too high. We know the buyers were right there, too high, come down. This is support. Needed to do this. It goes break low. I'm not paying that. Where's my support? I got that. I got this. I got this. And as far as I know, we're falling out the bottom. But remember, I said, as I know. And the real answer is I suspect, because I don't know. What do I find? Buyers. What happens? Where's my resistance? It's here. Is this too high? I got to watch what happens right here. If it comes down, I'm returning here and possibly out the bottom. If I keep going, now who's on the hook? These guys. And then I have my resistance and my stat. That's as deep as this is. Does it need to be more complex? Because it is random. Does that make sense? Please give a like if you're visiting in YouTube. Hope you like it. This is the Traders Lab, and it's open to everybody. There's a link in the bottom of YouTube if you're inclined. And there's no cost. You don't have to be a Bookmap subscriber now, ever, never. You won't be solicited. This is about the business of trading. The idea of Bookmaps, you understand, is this is a high level order flow tool. It gives me an edge. I could never learn to read the dome. Now, I started trading in 1980. We didn't get domes, I don't think, until 2000 or late 90s. I really can't remember. So I started looking at, and it was only 10 up, 10 down, I think it was at the time, was the maximum you could get. And I don't remember. I had CQG, which was, kind of the Cadillac, of trading platforms at the time. And it was the first one to have market profile. And I learned market profile from Peter Stottlemyre in 1985, maybe something like that. And I was pretty smart back then. I was building systems. I had indicators. I was all into this. And I got the profile and I said, I'm going to put this together. I'm really going to make it great. And all I did was set myself back a couple of years, not weeks, years. So because I was using these random inputs, I found, and it took me a while, because there were very few off-floor traders. All my buddies were floor traders, so this kind of stuff wasn't going on. The technology was just developing. Initially, there was something called ADP comp trend, where they actually ran an extension cord for data up to some place, and it was actually a phone line to get data, and it was somewhere up in Massachusetts. So I don't remember anymore, but it was very expensive. And it was very basic. Having a tick chart back then was euphoria. I'm just telling you. So very different world, right? So you guys actually have the other problem. I had no information. You have too much information. So you're all influenced, by the influencers and, and the guys who make $1 billion and they post all this stuff. The thing about it is most of us can't replicate what somebody else does. I can't replicate what you do, and you might not replicate what I do. In fact, I don't want you to. What I want you to do is come to a community that's professional and business oriented, and then take what you see and start reverse engineering it. Find your groove. There's some traders in TraderLab, they'll put a trade on and they'll get in bark a lounger and take a nap. We have other traders in TraderLab, they're going to be taking shorts here, longs here, right? And there's not a right or wrong answer. Most of us think this is trading. For me, it's not. Only because I trade less for more range. And I was a high volume trader when I say many years ago, over 20 years ago. And, 100 trades a day, that kind of thing. And I moved away from it because I either had to buy a membership, which I really didn't want to do, lease a seat to reduce my cost or change my time frame. So I moved away from the volume trading to more rotational trading. And over time, I started increasing the range of my rotations. And now I'm at this place where I take less trades. Like yesterday, I think there were 3 or 4 trades, but we had 20, 30 point range. In fact, the last trade I narrated in TraderLab at the end of my stream was called a mean reversion trade. I think it was a 30-point trade. The upside target was 6,000. Now, 6,000 turned out to be the high of the day. That's clueless about that. It has nothing to do with it. It's just the nature of how the market works. And then you just put your trade on, put your helmet on, get risk neutral if that's your plan. And I suggest risk neutral because that helps you manage the lunatic under the hood. Hide. Because when risk is still on, you're going to be hanging on this stuff. Euphoria to fear. Euphoria to fear. Anything can happen anywhere. Euphoria to panic. Euphoria, I hope, panic. Panic, bail out. I can't take it anymore. I have a chart that I have. In fact, I still have it on my startup. Actually. And I had it on it's not there currently, and what it was is I had a trade on, I took a short, and I got risk neutral, and my stop was a little close. Instead of having it outside the range, I moved it down so I would only lose 2 ticks instead of something like 6 ticks, just the way the structure was. And I got taken out, and then it was like a 30-point trade. Now so I felt really good about saving a couple bucks, and I gave up 1,000 or whatever it was, So I have that on because who was making that decision? I had a lapse of concentration and I wasn't even conscious that I did it. Hyde was driving. Me, I was out to lunch. It happens to all of us. So I put it there. And of course, it went into my error cost calculator. And needless to say, that doesn't happen much. It still happens when I make an error, like I have my stop and for whatever reason, it's 1 or 2 ticks where it shouldn't be. I still make errors. Why? I'm human. I'm not going to tell you anything different because it's the truth. But they're very few. But they still happen occasionally. And, goes in my error cost calculator. Why not? Is everybody tracking? Hope you're getting something out of this today, guys. And don't forget, by the way, I have to say this, it's rollover. So starting Monday, I will be quoting the December contract. All the levels that are in here are going to be adjusted by the spread between the settlement, between the SEP and the DECE contract. So whatever's sitting around over here is going to be moved for whatever that level is. And then I go in and look at things and just, get the scalpel out and do a little adjust if necessary. So everything will be changed, but it'll just be adjusted. The auction is generic. There's not much difference. And I use a backwards adjusted higher time frame contract that gets equalized. So that keeps everything in order. That's Investor RT. So that's happening this weekend. In fact, right after the close today, that's on my list of things to do. Let's see what else. Only streaming in Discord next week. Use the link in the bottom of YouTube if you want to see these things live. Hey, and come to the Discord TraderLab community. There's no cost for that. I think, and we have some really, really good traders in there. And it doesn't matter how long you've been trading. If you're a newer trader, I think it's the best time to come to a community that's professional, that's focused on the business. It's the best time. Because a lot of us, as we're going through this development process, we develop all kinds of bad habits. We go on Sim and we start playing a video game. Not good, because that's reinforcing. It's like a dog who chases a car. Well, if the dog is successful chasing the car, the dog's going to keep chasing the car. It's all part of reinforcement. So today you're fortunate because not only, we didn't even have simulators back when I learned to trade, so I couldn't even do this. I had to write it down on a piece of paper. That's why the term paper trading was created, you see. So I'm just saying is you guys have technology, but it also has two sides technology. It can help you. There's all kinds of trade analyzers and stuff you can use, to track your different trades and to help you with metrics. So you have a lot of tools, but you also have the ability to play games. And, let me see how much I can make. That'll take you out of business as well as everything else. The habits you form today are the ones you're going to bring forward with you. The bad habits are the ones you're going to have to work to change. So you start off right and understand the pitfalls, if you will, then you have the possibility maybe of creating sustainability. This is not a game. That's why I always say, if you want to gamble, go to casinos, it's entertainment. But when you're here, it's no different than an athlete who practices. They are intentional. They get coaching. They spend hours and hours and hours. I can't tell you how many hours I've spent because it's more than I care to think about, but it's years. And it's always to get better. If you're going to play in a competitive performance-based sport, or you want to be a musician, then you have to be proficient. And how do you get proficiency? Practice, practice, practice. So I always suggest in TraderLab, screenshots, annotations, build a book of trades. Take the structured trades that I've shared. They're not mechanical. There's no plug and play. I know we all like it. Me too. And then reverse engineer them. See where they fit, where they work, when they don't, why. Because it isn't so much that a trade works. It's more important to figure out why it didn't work. Now, was it qualified? Did it fit the range requirements to justify the risk? You have to lay out parameters. Then when you come here to trade and you're all heightened with fear and FOMO and all this, you bring your trade plan and that's your guide. And then you don't know the outcome. Why didn't this get taken out? I don't have an answer for you, but I do know there's stops here. I do know there's shorts in here. Stops are over the high. And I do know there's longs in here. And all the longs so far today have their stops under here. My inclination is if I get long, I have to get risk neutral. And I know that I can get taken out and my next trades are going to be a long, unless this does the Acapulco cliff dive. And if it breaks structure, then I just sit back and maybe I'm done for the day. It doesn't matter, does it? We're not hourly workers. I don't have to make something happen. I just have to follow my plan. That's all it is. It's not any deeper than that. So where did this come from? Here. And where's the next one? Here. So if I'm taking trades here or here, I know I have resistance there. See the reaction? And I have resistance here. And I have resistance here. And then I got this. That's it. That's all I need to know. Because I can't, what else can I know? Stops are here. Stops are here. That's what I know. Now I sit back, put my feet up, put my helmet on, and I go, please, right? I invoke everything I can. I promise I'll never do it again, please, but that doesn't work here. So now I just sit and I go, this is interesting. What is it going to do? I don't know. And I know what my head is saying. My head is saying, oh, it's going to go down. Get out. You're look at this. Your MFE is starting to evaporate. Let's get out. There's your resistance. Let's get out. But my plan says, no, let it take me out. Because until it's broke, as they say, you don't fix it, right? Does that make sense? How are we doing in YouTube? I'm not seeing anything being posted there. Is YouTube working? Can somebody just say hello, post something in YouTube so I know the chat's live? I see there's 85 of you in there. So everybody either already has all the answers or it's the posting, the chat's not working. Oh, it's good. So you guys all fell asleep. Okay. I know it's Friday. Yawn. But look at the opportunity. You guys ought to look at yesterday's stream if you haven't. Actually, you should watch these streams if you find this interesting. Here's the thing about trading, at least that I have found. The market is random. I can't be random. I cannot be random because I have nothing else I can hang on to. I have to be consistent. And then either it's gonna work or it's not gonna work, and whatever it does, it does. So I got resistance here. I got support here. Remember my next trade. If I get taken out, I'm going long unless there's no structure. And I can go long and take a stop like everybody else. And I'm going to go, well, okay, follow my plan. Am I going to have a winning day today? Clueless. Do I have winning days every day? Nope. Do I hit my loss limit? Sometimes. What do I do about that? Did I follow my plan? If so, okay. Random distribution of outcomes, not my day. Maybe tomorrow or maybe Monday. And then because I trade larger rotations, it takes care of itself. And that's why I went to larger rotations. I'm not trying to trade this. I'm executing at outside edges, and I know where the potential obstacles are. I know I got stops up here. If I can't get over here and over here, then the longs here, that's where the stops are. So I know that. So I know if I'm hanging out in here, I'm vulnerable, and I know that there's my fuel there. And on this side, my fuel is in here. Which side gets pushed out? So that's it. If I entered here, this is really where I got to be concerned. And then this is the next layer, and then that. So if I can't get through this and then this, then I can do this. Now I have this. If I come under here, everybody's going to do they're going to do the, I'm out of here and exit stage left, sell stops. This is where the fuel is, on this side and on this side. So my next trade, if it happens, not a recommendation, is to look outside to come back in, and it's called mean reversion. This is a structured trade. It's in those 60 PDFs that are available in the TraderLab. But you have to, and by the way, the PDFs are not plug and play. All they are examples that I threw together. And some of it was research that I was doing with Bookmap developers, and it is not applicable. But I thought that those 60 would give you something to sink your teeth in. But the real thing is what's going on in TraderLab. There's a document section. There's a library of webinars. It's open to everybody. Let me show you what that looks like if you haven't taken advantage of this. So there's a lot in here, guys. And it's open. This is a professional community. It's not romper room, so it might not be like a lot of other environments you've been in. I really don't know. I'm not a chat room person. It's just not my thing. I've certainly been in a couple of them over the years, but not much. I just find that you don't learn to trade in the chat room. You can get some good ideas, but there's also a lot of noise and a lot of bad information. So that's why you have to vet everything for yourself. By the way, this is what the library of webinars looks like and the doc section. Let me see if I can get this. And Ned, thanks for curating this for us. Primer webinar has about 33,000 views. You might want to look at that. It really talks about a little bit about me, but what's more important is about the business and anchored inputs, not random inputs. Random environment, you don't want random inputs, in my opinion. Meet the TraderLab. TraderLab's an advanced trader methodology. Advanced doesn't mean complicated. Trading is actually kind of simple. What is complex is our emotional attachment to it. Holy Grail, how close can you get? Is there a Holy Grail? Trading new all-time high. What is the plan? What are the trades for something like that with order flow triggers? Something you might want to look at. And there's many more. Stop gambling, start winning, maybe. And then the document section. All kinds of stuff. Auction market theory and a lot of contributions. Thanks, Matt, for this one. Many different traders have contributed to TraderLab, trade plans, outlines, things you can look at, and it'll save you time. And yet you still have to do the work. So nobody can hand you financial independence, or a business. You actually have to do it for yourself. So let's remember what we got. Sell stops, and if we fall out the bottom, it might, this is all I can tell you. Now, we got the market is long. So we got people in here, traders long from yesterday, hanging out. We got the longs from this morning, hanging out. If we don't continue higher to squeeze these guys, then what's logical? Lower. Once we come out and nobody knows what the velocity will be and how far it might come. If we come back in, it becomes potentially mean reversion. That's the next trade. So I know I've said it. I don't mean to bore you. But even yesterday's stream, when I talked about the last trade, which was probably a 20 or 30 point trade, long before it showed up, I said, this is where the next trade is. The thing about a trade plan is, for me, I don't make these things up. I go, well, if it does this, then that. And that's conditional statements. If the trend is up and I come out the bottom, take the stops, and I don't get additional selling below, and I see absorption. So if this, then that, then I get long. But if I fall out the bottom and I get maybe some buying and it fails, then what then? It's not up. It is down or done. So it's a conditional process. And this kind of evolved for me out of trading systems. When I built systems, the code was, if it was a conditional code, so it would kind of take you down a lot. It was branch logic. So if this is true, then blank, then this, and this. So it's the same process in trading. If this is too low and I have my buyers, if this is too low, then what? Then that or that. If I can't get above here, then what? Out the bottom. If I do get above here, then what? Then there. If I get above there, then what? Then that. High probability. If I can't get through here, then what? Then out. It's one or the other. So that's it. How complicated is that? Not. The only thing it is random. So if we accept randomness, same as the casinos do, then trading is not hard. It's just random. Can you differentiate? And do you know what hard is? What is hard about trading? Isn't it your emotions and the uncertainty? If you know where to trade and you have a statistical edge, then what is hard about trading? Give me an answer. Think about it. What is hard about trading? Oh, Sebastian, okay. Well, guys, if you're in YouTube and it isn't a slow mode, it's just important that, and that's, Bookmap has it set that way. Otherwise, I can't, there's just too much flying around for me to actually do a good job for you guys here. Use the link in the bottom of YouTube, come to TraderLab. You don't have to be a Bookmap subscriber. There's no impediment to you coming to TraderLab other than you confirm your Discord username, so it keeps the phishing, the spam, and I like to think of it, the riffraff out, gives you a better environment in TraderLab. So, we have all different types of traders. We have, all over the planet. So, if you're trading the ETH, you're over in Europe or wherever you are, no big deal. Asian session, no big deal. It's all the same. This process that I'm sharing is generic. It applies to all markets that have volume. If you don't have volume, you shouldn't be trading it anyway. Any market, any time frame, doesn't matter. You're trading options, you can use this. You're trading ETFs, you can use this. You're trading mutual funds, you can chart it, you can use it. Doesn't matter what you're doing. Stocks, doesn't matter. Jelly beans. There's a market for jelly beans, you can do it. Doesn't matter. This is market mechanics in its purest form. And it's not adulterated with indicators. It is pure. Now, you can do whatever you want with it. But the reason I do the stream is because we complicate trading because we think complexity reveals something that other traders don't see. That was my belief. I'm going to find what nobody else sees, right? Well, everybody's been doing the same thing you're doing forever. Since Wells Wilder came out with, RSI, ADX, DMI, all those wonderful things. George Lane, who I shared an office with, created stochastics. I'm telling you, I thought that was the holy grail. Look at that. It's an oscillator. And what is stochastics? It's moving averages, right? So they're all derivative. So it's all the same. So we have, and then Fibonacci, Elliott wave, all this stuff. Gann, I've done all of it. And that doesn't mean you can't extract dollars with it. But if it's not consistent, look at that. It did a Fibonacci extension. Wonderful. Well, yesterday didn't do it, but it'll do it. So it works sometimes. I like that. Yeah. Take it out. Throw it away. If you remove the elements that are random as much as possible and accept the market is random, but you need to have anchored inputs so you can't measure it. Is that logical? Do the casinos play random number of cards in blackjack? Do they turn the cards over at different times? What do they do? That's your business model. That's proven. If you're doing something different in a gaming environment and you're not following a process that is proven to work in a gaming environment, then you're adulterating the game. And you're taking statistics and probabilities and skewing them away from you and giving them to the gamblers. In fact, you're sitting with the gamblers. And we know how that works out. They also have winning hands. But the casinos didn't build all these casinos and these larger casinos, fly people in, comp hotel rooms, give you the cocktails and ticket to the buffet, and pay the gamblers and build larger casinos. Resistance. See? VPOC migration. So here's what we have. Too high, too low. Is that support? That's resistance. If I can come out, I can now go on and continue. If I can't, I'm going to stay rotational. That's it. How deep is that? It's not deep. It's not hard. And I know I'm not discounting your fear. That is a separate element. The only way to combat, hide, and fear and uncertainty is to understand how the market works, where it might do it, and after that, you wear a helmet because it's random. All the complexity that we add obscures what's right in front of us, in my experience. And I'm never going to say you can't use indicators and throw whatever you want at it. But the more random inputs, the more inconsistency, and you don't have the ability to measure it. If you're using like RSIs or MACDs, and they're all wonderful things at times, if you don't understand the condition of the market, you might be selling this, which may or may not be appropriate. But where do you think the opportunity really is? Is it on the long side or the short side? Would you be selling this if your indicator rolls over right here? You take a short in this context. I'm not saying some will, some won't. And it might be the trade of the century, but does it have an edge? You see what I'm saying? Everything works randomly. So where's my resistance? Isn't it here? Why? I had buyers here and there's sellers there. There's the icebergs. So the question becomes, are the buyers here and the buyers there going to push through the sellers there? Buyers are here, new retail prices there. Are we going to get through here and go there? Or are we going to come back here? Remember where the stops are. They're sitting under here. And I already know my next trade, right? If this fails, I'm getting long. If it qualifies, and I'm coming right back for that statistic, unless it does the Acapulco cliff dive and it violates the structure. You see? That's a trade plan. I'm not saying I'll have a profitable day doing it, but I have no reason to think that it won't work out in a random distribution of outcomes. And if it doesn't work out, then at the end of the day, I'm going to go, did I follow my plan? The P&L is the output of a vetted plan with an edge. The P&L does not hang on any discrete individual trade. But if I can understand how the market works, I can understand that I only want to be long unless I'm a counter trend trader. And me, well, in this condition, it's only one way for me. But other traders are going to trade both sides. I have no opinion. I just know what I do. And I think for developing traders, you kind of put a stake in the ground and you stick with the dominant side. The opposite side, this can be used for developing trade management. And that's a function of time frame. I hope that makes sense. This is making some sense, guys. Please give a like. If you're in YouTube, remember next week, I will not be streaming live in YouTube. If you want to attend live stream in the TraderLab, you're all invited. There's no cost. You need to use the link in the bottom of YouTube. Do it today and then get registered. And all it means, and you're not, it's nothing more than confirming your Discord. So when you confirm it, you get into the restricted areas in the Bookmap server. So you can kind of see the specialty stuff and the streamers and the special programs. You don't have to be a Bookmap subscriber, but you do need to confirm that you're the real deal and that you're not Fantasy Island. Keeps the riffraff out, as I like to say. And because we want to have the best environment for our traders and our members. TraderLab is open to all of you while it's available, and it's not going to go on indefinitely. You might want to consider taking advantage of it. I'm a full-time trader, so when I stream, I don't trade. And as you can probably tell from many of the things you've seen over the years, I've been doing this for a number of years now. There's a lot of trades I don't get to take, so it's kind of an expensive thing for me. But I've been doing this so long, and I trade ETH. There's tons of trades. I'm not worried about it. But it does bother me psychologically when I see 30-point trades come by. and I narrate it here. You can understand, right? So that's why at some point I may not continue. But I went through such a miserable experience in my development. And I talk about years. I'm not talking 2, 3. I'm talking many, many years of thinking I had it and then having it break down. I didn't understand the problem. Nobody told me about it. There were no off-floor traders. That was the problem for me, and no information. We had no internet, no PCs. So it was really, an analog experience. You wanted to place a trade, you would write it out on a piece of paper, timestamp it, pick up the phone, and my guy would hand signal it into the pit. He'd, while I'm holding, and then I'd get the fill back, write it on the slip, timestamp. I mean, this is what it was. So that's the way it was, and my buddies, there were no off-floor traders. So it was really, and I didn't come in the business to be a trader. And I have never talked about that. And it's not important for the stream. I never intended to be a trader. So it just happened where I met one of the largest grain traders, wheat traders in the world, and he brought me into the business. But I came into the business for hedging. Had nothing to do with grains. It had to do with financial instruments and interest rate risk. So I actually came in as a hedger. So it's a totally different conversation. It's not important. So I'm just telling you, you never know what's going to happen. And my goal was to be a floor trader once I got exposed to it. And then the price of membership was out of my reach at the time. So it was, I'm going to learn how to trade. So I went to CME, learned classical bar charting. There were no candles. All there was measured moves. So one of the problems for me is I thought everything was predictable. Oh, you got to, head and shoulders, right? It's going to go here. It's going to. So I was making statements of what it was going to do. So my orientation was predicting, right? So I started out believing in prediction because that's what I was taught. And that was classical bar charting, pennants, this, that, and the other thing, measured moves. Well, it's not. It's random like everything else. So I had to undo my beliefs. So I believed I was doing the right thing, just like you believe you might be doing the right thing. But maybe what you believe is not what the business is. I had to change my beliefs. And it was very hard for me because the random winners kept me staying with what I believed. I believed I could make it better. So I kept doing things that had no edge. But I had winners. So it was just make it better. And I'm hear the word very succinctly. Belief. I believed. I didn't understand the emotional triggers. I didn't understand that I was in a random environment with random inputs. I didn't understand that that was a path for me for failure and lack of sustainability. I didn't understand it. Do you understand the things that are keeping you from sustainability? I'm not saying the things that were my obstacles are yours, but reflect on it. Think about it this weekend. Watch this stream again. And don't forget, Monday I'll be quoting the December contract. We're doing rollover. All the prices on here will be adjusted. And I'm only streaming in the Bookmap Discord TraderLab starting next week. And for the next week, YouTube will be put up here for you guys to review later, like in the evening. But if you want to watch this live, use the link in the bottom of YouTube to join the TraderLab community. There's no cost. You will not be solicited. But you do have to confirm your Discord username. Please give a like on the way out. Thanks so much for visiting the TraderLab community. Hope you got something from this. Look forward to seeing you guys in the TraderLab next week.